I'm Yahoo Finance Executive Editor Brian Sozzi. You're taking a look at a live shot, the opening bells on Wall Street on this Monday morning. FIFA World Cup 2026 New York, New Jersey host committee ringing the bell at the New York Stock Exchange. Mouthful there for sure. Biopharmaceutical company Axum Therapeutics getting things underway over at the NASDAQ. The markets enter what I am calling a strange week. We'll get earnings from the Mag 7 names such as Alphabet and Tesla, but the Fed is in a blackout period ahead of its rates meeting next week, and that probably won't stop President Trump from taking a few more jabs at Fed Chief Jerome Powell. So where the market will take its cue from was anyone's guess. Now, an opening bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's see what's popping here on this Monday morning. Yahoo Finance senior reporter Ali Canal is standing by at the NASDAQ in Times Square. Ali.
Hi, Saz. Well, we did open in the green here, just modestly, though. The Dow is only up about 80 points, the NASDAQ up about 0.3%, and the benchmark S&P up about 0.2%. I have my eye on a few particular names. One is Block, ticker symbol XYZ. Shares are jumping this morning. I'm seeing gains of around 7% after its inclusion in the S&P 500. Block has faced several hurdles in terms of profitability. We see a lot of volatility in this name, but the inclusion in the S&P 500 triggering some immediate buying pressure as passive funds adjust their holdings to reflect the index. So a big moment for Block and a big moment for the fintech space as well. I also want to get a look at another ticker that's trending on Yahoo Finance, and that is Tesla. As always, set to report earnings after the bell on Wednesday. We know a big focus is going to be on the future. So autonomous driving, robo-taxis, that's really been the linchpin when it comes to what Tesla bulls are looking at. But also we have the core business, the EV side, a lot of competition on that front. So all eyes are going to be on that earnings call with Elon Musk set to deliver that after the bell on Wednesday. And then, of course, we're also going to be seeing results from Alphabet on Wednesday as well. So just a lot of earnings to come over the next few weeks, and markets right now, wading through. We did have a pretty solid round last week. We'll see if we can keep up some of this momentum here, Brian.
All right. Thanks so much, Ali. Appreciate it. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, the tariff clock is ticking. We're only 10 trading days out from President Trump's self-imposed August 1st deadline to land a host of trade deals. If deals aren't hit, markets will enter tariff land once again. Commerce Secretary Howard Lutnick reinforced the point over the weekend, saying August 1st is a hard deadline for tariffs. Markets continue to shrug off the deadline for now. Number two, earnings fest begins this week. Markets have powered to records on the back of much better than expected earnings from the likes of JP Morgan, American Express, and Delta. The numbers have been somewhat shocking given the geopolitical backdrop. 83% of S&P 500 companies surpassed expectations on the top and bottom lines, better than the 1, 5, and 10-year beat averages, according to FactSet. This morning, Domino's Pizza badly whiffed on earnings, but the stock is being eaten up as U.S. sales return to growth on the back of stuffed crust pizza. Number three, looking for a charge. Tesla CEO Elon Musk will look to get investors plugged back in to the bull thesis on a stock that has tanked 19% year to date. The EV maker will report earnings on Wednesday, with the street focused on how Musk's volatile political positions and weak EV demand aims to shape the business into 2026. Says JP Morgan analyst Ryan Brinkman, sales remain in a troubling trend and we continue to see risks to the full year outlook and valuation. All right, here's the opening bid roundtable. Let's get them on the screen here. Ross Mayfield, Baird investment strategist, Pete Mulmate, IG North America interim CEO, and Yahoo Finance senior reporter Ali Canal. Good to see you all. Ali, I want to go back to you here for a moment because this is a very big week for earnings, and you heard some of the numbers I shouted out there. This has been a really good earnings season so far. 83% of companies in the S&P 500 have come out here and not just beat on the bottom line, they've also beat on the top line too.
Yeah, and coming into earnings season, the bar was low. So we saw earnings revisions heading into the second quarter. So bar was low. However, investor expectations have been high. We're in a stock market where we are at all-time highs. Valuations have been stretched for a lot of these companies. And last week, you saw the big banks. They came out with solid results. They talked about a resilient consumer, but we ended the week with pretty modest gains. Netflix, one of the first big tech companies to report, we ended Friday's session down 5% despite a beat and raise. So we're in this environment where good just isn't good enough. And Lori Calvasina from RBC Capital Markets, she described this earnings season so far as fine, not fabulous. And we really need fabulous in order to continue to see some of those gains here. Of course, when it comes to big tech, this is going to be a huge week with both Tesla and Alphabet set to report. And we have seen that the Mag 7 companies, compared to the other 493 companies in the S&P 500, they tend to significantly outperform. Now, over the coming quarters, that's supposed to narrow a bit, so potentially that leads more opportunity to some other non-tech names to outperform. And to that point, so far this year, we have seen pretty healthy market breadth with sectors like industrials, financials, and communication services trading at those record highs, along with big tech. So we'll see what the rest of earnings season brings, but I do think investors have really high expectations for all of these companies.
Pete, over to you. Speaking of expectations, this is a market that has traded up into earnings season, trading at lofty valuations. Have you been surprised by the positive reactions to these earnings reports? You would have thought coming in, a lot of this was already priced in.
I agree with you. I would think we would have seen a little bit of that. We saw that play through on Netflix on Friday with really good numbers and them ending up the day 5% lower. We're seeing overall, at 22 times earnings right now, everything is priced relatively for a perfect set of earnings announcements. With 119 firms reporting this week, I expect we'll see some of that continue to play through. 83% of the companies have reported top second quarter earnings, above the 5-year average of 78, but it still lags from the norm of 9.1. So I would imagine that we're going to continue to see, especially in some of these larger names, if we meet or beat those expectations, we'll see those play out, and that continue and push to the upside will continue to drive markets higher.
Ross, hit me with some of the bad news here, because nothing in this world is perfect. Life is not perfect. Where are the disappointments coming from over the next few weeks?
Yeah, I do think this is a bit of a kitchen sink quarter for a lot of companies. There's going to be some weirdness because of the tariffs on and off that we've dealt with over the last three months or so. So look, I think the consumer story has held up, but I expect that some consumer companies, particularly those who are serving lower income individuals, will report struggles. And we've seen that from some of the names in previous quarters as well. So maybe not a new theme, but you've got the excitement around AI, you've got the cyclical leadership from financials and industrials. So I would be looking at something like Staples for some, maybe downside disappointment. Again, I like the market setup overall, but as you mentioned, it's not perfect. And I would look at, some of those downtrodden consumer names that are really struggling with this current environment and this bifurcation in the consumer landscape.
Let me stay with you, Ross. Are we looking at, I guess, peak earnings euphoria? You mentioned tariffs. We are only 10 trading days away from tariffs becoming back, or really coming back into the investing equation. Are you concerned that right now, at this moment, this is as good as it gets for corporate earnings this year?
No, I don't think so. I think that corporate earnings are in a really strong trend here. And, if anything, maybe the market has run a bit ahead of that. But the backdrop is solid. Again, we have an economy that last week surprised on a number of different levels. Inflation coming down, the Fed looking to cut rates later this year. The labor market, if you look at something like initial claims, not really, screaming uncle. So we have a strong economy, or a solid enough economy, earnings growth on the back of that. And I think that, as you mentioned, the big concern is just that tariffs will get layered on. And my one near-term concern for the market is less about the earnings or the fundamentals, but more that if the administration sees markets at all-time high and thinks that the market is approving of the tariff policy, they'll push forward with something that's a bit, counterproductive, and the market might have to respond in kind. So there could be some volatility, but I think it'll be on the price front, not the earnings front. Pete,
convince me that 30% tariffs on the European Union on August 1st is a good thing.
I think it's going to be a challenging thing. I think we're going to have a lot of back and forth between now and then. And if we see anything past the 10% baseline, I think that's going to be impactful to our largest trading partner. So I would imagine that and I think Ross made a great point. We haven't seen this play through in CPI, PPI, or any other pricing metrics that we're looking at. But once we do, or if we do start to see some of that play through, I think we're going to see some challenges around rate trajectory and some of the other components that the market has counted on. You look at a Fed's not supposed to move in July, but it's almost certain at the next meeting, 64, 65%. I think those come into play if we end up seeing these tariff structures get a little bit more emboldened. We're seeing the 10s, 30s spread. We're seeing that long end treasury continue to rally and yield, even though we're seeing that short end fall. Markets anticipating a little bit more inflation, the bond market anticipating a little bit more inflation. That's something I'm going to keep an eye on.
And last year, we're also tracking all things Tesla. Ali, it's, you would think investors want to hear more on the robo-taxis. You've been talking about it all morning, and I agree with you because this is going to be a big multi-year initiative for Tesla, billions of dollars likely in terms of investment. But I do think they just want to hear if they're going to sell more cars. Like, when does that top line pick up for this company? Because they're not making money off robo-taxis, at least for the next few years.
Yeah, Brian, you're absolutely right. And when it comes to sales, the U.S., we're slipping abroad. There's a lot of competition on that front and cheaper EV models too. That was something that analysts were hoping we could see before the expiration of those EV tax credits at the end of September. We haven't seen that. We likely won't. So what does that mean for the competitive landscape here? And it's coming at a time where consumer purchasing behavior has shifted a bit. There's more of a favor for hybrids than pure EV plays. On the infrastructure side, we're still lacking a bit there. So where's the innovation here? What does Elon Musk plan to do to reinvigorate some of these sales? Because it is core to the business. It is the part of the business that's making money. And we've just seen struggle after struggle on that front. So he's going to have to come out and say something that's encouraging to investors, as that's not just 5-10 years down the line. What is the short-term plan for Tesla to reinvigorate sales and get some profits?
Pete, we've seen some pretty strong moves in Tesla the past few earnings reports. Your team at Tasty Treats seeing anything in the options market ahead of this Tesla release?
You know what? Vol's in a little bit on Tesla right now. We see about an expected 23% move going into the earnings announcement. Customers, for the most part, are still bullish, but we're seeing that play through most of the Mag 7 names right now. So we're seeing a relatively, with volatility in at these levels, Tesla a little bit different story than a lot of the other Mag 7s, 20% below its highs. Not seeing a lot of skew in the options change, giving us some indication as to that. But again, we're looking for right now around that $23 move on either side on the earnings.
Ross, last word over to you. What's the more important report this week for the market more broadly? Is it Alphabet or is it a Tesla?
I think it's Alphabet. Tesla has always been a kind of the idiosyncratic member of the Mag 7, lumped in because of its size and its tech adjacency. But as you mentioned, it sells cars, so it's got these AI links and big tech aspirations, but it kind of sits on its own. Alphabet is an AI story. It's a big tech story. It's a story that's has a lot to do with the EU trade and some of the non-tariff barriers over in the EU. So there is a lot there, and I think that the extent to which AI tools like ChatGPT are cannibalizing or eating some of the moat around that company, around changing the way that we use search, the way that we interact with our software. That is the story, and that is the company that's most going to tell the story about how AI is working in our lives. And that's, again, we've got the Mag 7 at all-time highs. We're back on the AI train. So that's the thing that the market is thinking about right now. I think that's the bigger story.
Well said. Straight ahead, there's a new member to the $1 trillion market cap club, and we'll have our stock of the day. Your clue, OpenAI is trying to crush or pummel its most important business. We'll be right back. Welcome back to Opening Bid. We have a new member to the $1 trillion market cap club. That is Taiwan Semiconductor. The company busted through the mark on the back of a strong quarter and a guidance hike last week at $1.24 trillion, I should say. Taiwan Semiconductor now has a larger market cap than Warren Buffett's Berkshire Hathaway. News you can use. All right, let's fire up our stock of the day. Alphabet ahead of the tech giant's earnings release on Wednesday. Alphabet stock is entering earnings day strong, gaining about 7% in the past month. But you wouldn't get this bullish vibe looking at Alphabet's price to earnings ratio. Check out this chart from Evercore ISI tech analyst Mark Mahaney, which shows Alphabet's forward P ratio trading at nearly trough levels. Now hop onto the Yahoo Finance platform and you'll see Alphabet's forward P ratio of about 19.3 times below the S&P 500's 24 times. Ultimately, Alphabet must deliver on three fronts to appease the bulls. First, the ads on the core search platform need to be above estimates as to alleviate competitive concerns, whether that's from AI agents or OpenAI. YouTube has to be strong again from top to bottom. That is, Netflix earnings last week showed streaming domination. And lastly, Alphabet must show reasonable cost controls even as it spends aggressively to build AI infrastructure. Still with me is my roundtable, Ross Mayfield, Baird investment strategist, and Yahoo Finance senior reporter, Ali Cannell. Ali, let me get over to you here. The Netflix numbers were strong, and I want to mention Netflix because they have a direct tie into YouTube. Now, YouTube arguably has been the story narrative on Alphabet for the better part of the year, in my humble view.
And sources tell me that when it comes to Netflix's biggest competition, it is YouTube. It's the creator economy. It's where people are plopping on their couch and they're turning on YouTube more than they have in the past. So for Netflix and competing for those eyeballs, YouTube is a top focus. And they were asked about this on the call, whether or not they would consider similar deals with content creators that we've seen from YouTube. And they said that they're open to everything, but that they have a different model, a different content proposition to consumers, but it's still top of mind for executives at Netflix. They are watching YouTube closely, and we have seen that share tick up. So I think you're absolutely right. YouTube needs to be perfect. For Alphabet too, I'm also looking closely at the search engine business because there has been talk that chatbots like OpenAI's ChatGPT, that they could be taking some market share away. And even anecdotally, sometimes I'll go on ChatGPT and ask Chat a question and not Google it. So there are some longer term questions about whether we could see that weigh on Alphabet in the future. But in the near term, analysts say that some of those concerns have been appropriately priced into the valuation, and that their first party access to some of that data, along with YouTube and those other initiatives like its cloud business, that already gives it the edge over some of those AI chatbots and those competitors there. But like we've been saying, first of the hyperscalers to report, it's really going to set the tone for the rest of this earnings season and the rest of big tech still yet to come.
Ross, we just showed a chart showing Alphabet's P ratio, 4P ratio, trading really at trough levels going back over the past 5 years. And my question to you is that deserved? Now, so this is a discount to the S&P 500, but you heard Ali, you have Netflix maybe taking share from YouTube. You have that challenge to their search dominance, whether it's from agents or in OpenAI or even something like Perplexity. Does that valuation make sense to you?
I think it does because, as you all have mentioned, this is kind of an existential crisis or question facing Google, right? I mean, Google is chapstick, Kleenex. It's synonymous with search to the point that it's got such a big moat around it, and now there are chips being put in that armor, and so I do think that the multiple it's trading at is reflective of that existential question about its core business. Now, Google has done very well over the last 20 years. I think there's a lot of reason to think it'll come out of the other side with a very strong position. But it reflects to me that core question about what it does best, what is so central to fueling all of its other bets, from Waymo to YouTube many years ago, is that core search business, and it's under threat, both from AI, but also from antitrust and regulatory issues, as we've seen over the last couple of years. So there are multiple avenues with which that is being challenged.
Pete, let me get over to you. If Alphabet comes out here and says, we're going to spend just even more billions than investors thought on AI infrastructure, what tone would that set for the Mag 7 trade?
I think we're at a point now where if they double, triple down, it's what is the ROI we're going to be able to expect from these kinds of investments? The other question is too are they actually starting to lose this race. And I think at that point, they're going to have to demonstrate some ability to have this investment yield a return for them at some point. So I think it's going to be a struggle right now. Ad revenue being one, the other is the AI piece, and what is their plan to actually bring that into the revenue stream?
All right, it's time now for our question of the day. Is the market priced for perfection? I'm going to put the pressure on our group here. Ross, I'm going to start with you. A market could stay priced for perfection for a long period of time. I would argue, I could ask this question 6 months ago, and we probably would have said it was priced for perfection. Is it priced for perfection now, and how long can it stay at these levels? When we're looking at a Fed meeting next week, we're looking at an August 1st tariff deadline, there are some real potential negative shocks coming to this market.
Yeah, you're absolutely right. I would say not priced to perfection, but priced for very, very good. I mean, you have a forward multiple that's approaching 2021 levels, but only expecting the S&P 9-ish% growth for 2025. So that's not crazy. That's not something that's undeliverable. So I think you're priced for very good. You mentioned there's a lot of kind of potential headwinds or catalysts out there that could cause some near-term pain. We've had this big run-up. Usually you have to consolidate a move like that, maybe let the earnings and the fundamentals kind of catch up to price. But the other thing is the move we've seen, that breadth, that momentum, the kind of global and cyclical nature of this move usually does portend pretty strong returns 12 months out. So I think that near term, you could see some chop. You could see, even a bit of a correction here. But it's priced for very good, and I think it's going to be able to deliver on that.
Pete, Ross has set you up for a big correction call here on Yahoo Finance. Tell me that the S&P 500 is going to lose 10 to 15% over the next 2 weeks. Come on, the floor is yours.
Oh, it's going to zero. Yeah, no, he has set me up wonderfully. You know what? I think we are getting close to that perfection in terms of rates will be flat or lower. Tariffs have not been impactful, nor will they be in the future. I think we're at a point right now where, you made a great point that these runs tend to last longer than anybody expects, and I agree with you on that. But I think we are in that mood that bad news is good news and good news is good news, and that can change. Whether we've got another 2-3% to the upside, but I would imagine by the fall we'll be seeing this market trading lower.
Allie, last word to you. This has been an unshakable market. Tariff headlines really haven't taken the market down. Even companies that have reported squishy earnings. I'll put Domino's results into this morning. I mean, they missed badly on earnings, but the stock's up on a U.S. same-store sales figure and some stuffed crust pizza results. I mean, give me a break. It's hard to figure out if tariffs aren't going to take this market down, what will?
I think it's going to be disappointment on the earnings front, especially for a big company like NVIDIA. I think that is the biggest risk in the near term. But we are in a bull market, and I think looking ahead, it's all about artificial intelligence. We are still in the early innings of AI. If you look back in history at any other bull market, there is always that innovation. And this time around, it's AI. And we haven't even scratched the surface when it comes to some of those productivity gains there, too. So overall, I think we are going to see this market chug along higher, but as we've been discussing, there are still near-term risks. We could see some chops, some volatility, in particular when it comes to the interest rate path. I think we're going to be priced out of that for this year. I think we're going to see those cuts not until 2026. How the market takes that is a big TBD, but I think if we continue to see economic data come in strong, if earnings come in strong, then we're at a solid place in this market.
Way to drop the mic, y'all, on this Monday morning. Big thank you to Ross Mayfield, Pete Mulmat, and Allie Canal bringing the fire here to kick off the week. Coming up, Yahoo Finance Market Catalyst. We bring you the news behind the market moves of the trading day. Stick around.